C 5.1.11. BT Pathology Lab Limited is using a X-ray machines which reached at the end of their useful life. Following new X-ray machines are of two different brands with same features are available for the purchase. So there are two brands, XYZ and ABC. Cost of the machine is given, life of the machine is given. Now life is different, so equalized annual approach is more appropriate whenever the lives are not same. Maintenance cost from 1 to 5 years, 6 to 10 years and 11 to 15 years are given. Rate of depreciation is given. If tax rate is given, then tax benefit on depreciation will be relevant. Residual value of both of the above machines shall be dropped by 1/3 of purchase price in the first year itself, and thereafter shall be depreciated at the rate mentioned above. So first year there will be a depreciation of 1/3 of the cost price. Alternatively, the machine of brand ABC, that is the second one, can also be taken on rent to be returned back to the owner after the use on following terms and conditions. Annual rent shall be paid in the beginning of the each year, and for the first year it shall be 1,02,000. Annual rent for subsequent 4 years shall be 1,02,500. So there is an increase of 500 rupees, but for the purpose of calculation we'll have to consider it. Annual rent for the first 5 years shall be 1,09,950. So in last 5 years the annual rent is changing. Total will be 10 years. The rent agreement can be terminated by BT Labs, that is by us, by making a payment of rupees 1 lakh as a penalty. This penalty would be reduced by 10,000 each year of the period of the rental agreement. So what does this mean? If you are cancelling on the day on which you are entering into agreement, your penalty will be 1 lakh rupees. After 1 year, your penalty will be only 90,000 rupees. If you are cancelling after 5 years, your penalty will be only 50,000 for cancellation of contract. If you are cancelling after 10 years, then there will be no penalty. This is what does this mean. You are required to advise which brand of X-ray machine should be acquired, assuming that the use of the machine shall be for 20 years. Now, XYZ runs for 15 years, other both are for 10 years. Then also 20 years calculation we can easily make it. For XYZ will be doing it for 15 years, but we'll be converting it into equalized annual value. ABC also 10 years, I'll be converting it into equalized annual value. State which of the following option is most economical if the machine is likely to be used only for the period of 5 years. This will be relevant. The cost of the capital of BT Labs is 12%. Let me start with machine XYZ for the period of 15 years. So machine is XYZ. Please understand, I will be finding out cash outflows only because no cash inflows are given. So cash outflow will be positive, cash inflow will be negative. If I purchase machine today, 6 lakhs rupees I'll have to pay. 0 years, 6 lakhs rupees. Sir, why I am not writing down negative figure? Because cash outflow is my positive figure. So cash inflow will be my negative figure. Net answer will be cash outflow. 1 to 5 years I will have to spend 20,000 rupees. 6 to 10 years, 28,000. And 11 to 15 years, 39,000. At the end of 15th year, I will be getting my residual money back. Now, depreciation is given. But please understand, depreciation is a non-cash item. What is relevant for us is only tax benefit on depreciation. Tax rate is not given in the question. I am assuming tax is 0 and so I'll not be considering depreciation. Sir, then why depreciation rate and figures are given? Just because you can find out what will be the scrap value at the end of 15th year. Please understand. If I purchase the machinery at 6 lakhs rupees, in 1 year it is going to depreciate 1/3. That is 2 lakh rupees. So what will be value at the end of 1 year is 4 lakh rupees. How 4 lakh rupees? 6 lakhs rupees minus 2 lakh rupees. Now this machine will depreciate for next 14 years. Next 14 years, this will be depreciated at the rate of 4%. So 14 years of depreciation at the rate of 4%. What is 1 year depreciation? 6 lakhs into 4%. Please note, we have taken assumption depreciation is at the rate of SLM. It is not specified that the rate of depreciation will be levied on a WDV or it will be levied on the cost price. We are assuming it is by SLM. So 1 year depreciation will be 24,000. And so 14 years depreciation will be 14 into 24,000, which is 3,36,000. What is depreciation in first year? 2 lakhs. What is depreciation in 14 years? 3,36,000. What will be scrap value at the end of a 15th year? What is cost price? 6 lakhs minus 2 lakh was depreciation for first year and 3,36,000 was depreciation for remaining years. So total will be 6 lakhs minus 5,36,000, which is 64,000. The doctor will be receiving, not a doctor, pathology lab will be receiving 64,000 at the end of a 15th year. So at the end of a 15th year, I will be receiving. Why I am writing down negative figure? Because I have written cash outflow. So any cash inflow will be a negative figure, will be 64,000. This will be my net cash outflow, but I'll have to find out present value at the rate of 12%. See, I could have easily done this in an Excel sheet, but I'm explaining you how to do it in examination. This is 6 lakhs, so factor will be 1. The answer will remain 6 lakhs. This 5 years of factor, how to write it down? 5 years factor is nothing but 1 divided by 1.12 is equal to m plus 1, 2, 3, 4, 5. This is 5 years factor, that is 3.605. What will be factor for 6 to 10 years? See how to find out. 1 divided by 1.12 is equal to, I will skip a 5 years factor. 2, 3, 4, 5. Now this is 6th year factor. M plus, 7th year factor M plus, 8th year factor M plus, 9th year factor M plus, and 10th year factor M plus. MRC is a 2.045. 11th to 15th year factor. How I'll find out? 1 divided by 1.12. 10 times is equal to, I will skip a first 10 years factor. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11th M plus, 12th M plus, 13th M plus, 14th M plus, 15th M plus. MRC, this is last 5 years factor, that is 1.161. What will be 15th year factor is this 1 divided by 1.12 is equal to 15 times. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. This is 0.183. Now I have got the factors. Now I just need to do m plus m minus in my total calculation. 6 lakhs is equal to m plus 20,000 into 3.605 is equal to m plus 28,000 into 2.045 is equal to m plus 39,000 into 1.6161 is equal to m plus 64,000 into 0.183 is equal to m minus. MRC will be 7,62,927. This is my cash outflow present value. It is not NPV. It is a present value of cash outflow. I've got present value of cash outflow. Now what I'll find out is equalized annual NPV. No, equalized annual present value of cash outflow. So I will find out equalized annual present value of cash outflows. So how to do it? 7,62,927 divided by 15. No, this is not how we find out equalized annual value. What we take is a factor of 15 years. And believe it or not, I am having factor of 15 years. So this is factor of first 5 years, second 5 years and third 5 years. So I'm having factor of 15 years. I just need to find out what is it. 3.605 plus 2.045 plus 1.161, which is 6.811. I am getting equalized annual cash outflow, which is 7,62,927 divided by 6.811. It is 1,12,014. It is equalized annual present value of cash outflow. And so I will compare this figure with ABC and the rented option. Second option is purchasing ABC machine. If they purchase ABC machine, again I'll be writing down cash outflow. At the end of 0 year, what will be cash outflow is 4,50,000. Cash outflow from 1 to 5 years will be 31,000. And 5 to 10 years will be 50,000. 53,000. Let us find out what will be the realizable value or sales value at the end of 10th year. Now this machine we are going to use only for 10 years. So we are going to find out realizable value after 10 years. What is the cost of the machine? 4,50,000. 1/3 will be depreciated in the first year. That is 1,50,000. The written down value will be 3 lakhs. What will be depreciation for 9 years? Or how much value will reduce for 9 years? 6% into 9. let me write on full, will be 4,50,000 into 6% into 9. 4,50,000 into 6% into 9. 2,43,000. Remaining will be 57,000 will be nothing but scrap value at the end of 10th year. So at the end of 10th year, negative 57,000. Why negative 57,000? Because my primary is cash outflow. So I am writing outflow as positive. So inflow I'll have to write it down negative. I'll have to find out a present value at the rate of 12%. I can directly take this 3.605 for 1 to 5 years. I can also take this for 6 to 10 years, 2.045. This will be 1. This I cannot take the same. I'll have to find it out. 1 divided by 1.12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 0.322. I can directly find out present value of cash outflow, which will be 4,50,000 m plus 31,000 into 3.605 is equal to m plus 53,000 into 2.045 is equal to m plus 57,000 into 0.322 is equal to m minus MRC is 6,51,786. What is this? It is not NPV, it is present value of cash outflow. Let me take this point over here. Sir, why can't we compare this and this? Because this is for 15 years. Present value of cash flow, but the value is for 15 years. You have found out the cash flow of 15 years and then found out the present value. And this cash flow is of only 10 years. So here comes the concept of equalized annual value. We will be finding out equalized annual cash outflow, present value of cash outflow. How? 6,51,786 divided by present value annuity factor of 10 years. This is present value annuity factor of 10 years, which is 5.650. 6,51,786 6,51,786 divided by 5.650. That is 1,50,360. Sir, can we compare this answer and this answer? The answer is yes, because we have found out equalized annual amount. If we find out equalized annual amount, it is per annum amount, and so we can always compare it. XYZ ABC we have done. There is also another option of renting ABC. If I rent ABC, today my cash outflow will be nothing, but annual rent shall be paid in the beginning of the each year. For the first year, it shall be 1,20,000. So, beginning of first year, the cash outflow will be 1,02,000. Beginning of annual rent for subsequent 4 years will be 1,02,500. So beginning from 2 to 5th year will be 1,02,500. Again, this is a cash outflow. And from the beginning, annual rent for the final 5 years will be 1,09,950. 1,09,950. We know we are not going to terminate the contract if I am taking cash outflow for the period of 10 years, and if the rent agreement is for 10 years, we are not going to cancel it in between. So we can take this cash outflow directly, but to find out a present value here will be difficult. Why it will be difficult, I'll tell you. You will have to use a present value factor in a logical manner. I always suggest this. Instead of beginning, convert at the end. This is at the end of 0 year. This is at the end of 1 to 4 years. And this is at the end of 5th to 9th year. Because you are paying at the beginning of 9th year, you will no longer be paying at the end of 10th year, right? You will be paying at the beginning of the 10th year, but you will not be paying at the beginning of the, at the end of the 10th year. So this will be at the end of the year. Remove this and then find out present value. Present value factor is 1. See what student makes the mistake, they take the same factor. This is from end of the 1st year to end of the 5th year. This is at end of the 1st year to end of the 4th year. And so I will have to re-find out my present value factor. 1 divided by 1.12 is equal to m plus, is equal to m plus, is equal to m plus, is equal to m plus. MRC is 3.037. And this will be from 5th to 9th year, not from 6th to 10th year. It is from 5th to 9th year. 1 divided by 1.12, 1, 2, 3, 4. 5th, m plus 6th, m plus 7th, m plus 8th, m plus 9th, m plus. MRC is 2.901. I can find out present value of cash outflow. This will be for 10 years. 1,02,000 m plus 1,02,500 multiplied by 3.037 is equal to m plus 1,09,950 multiplied by 2.901 is equal to m plus. MRC is 7,32,257. These are the cash flow for the period of 10 years. Now it is the present value, and this cash flow will be for 10 years. What will be the scrap value at the end of 10th year? No scrap value. We just need to return it back to the original owner at the end of 10th year. If we are using for full 10 years, we are not going to pay any penalty. And so this will be present value of cash outflow. I can find out equalized annual present value of cash outflow. Now, whether the cash flow is at the beginning of the year or at the end of the year, I can use a 10 years factor, which is 5.650. This is 10 years factor, 5.650. 7,32,257 divided by 5.60. 650, which is 1,29,603. 1,29,603. 600 and 1,29,000, 1,15,000 and 1,12,000. Which is good option? 1,12,000, because it is having lowest equalized annual NPV. One of the question which student asked me is, sir, why should we not take this factor for 9 years? Because please understand, even if you are paying the installment, paying the rent at the beginning of the year, but still you will be using this particular machinery for 10 full years. So you will return back the machinery. After not paying beginning of the 10th year rent, you will be returning it back after 10th year. So what is the use of the machinery? Yes, there is no cash outflow at the end of 10th year, but the machinery will be fully used for 10 years. This factor cannot be taken for 9 years. This factor should be taken for 10 years. So we have taken factor for 10 years. Let us go to second question. We have advised in first. B. State which of the option is most economical if the machine is likely to be used for a period of 5 years. So if we are going to use the machinery XYZ for 5 years, XYZ for 5 years, what will be my cash outflow at the end of 0 year? 6 lakhs. What will be cash outflow from 1 to 5th year? Will be 20,000. And I will be getting scrap value at the end of 5th year. What will be scrap value at the end of 5th year? Let us find out. The cost is the 6 lakhs. First year will be depreciated by 2 lakhs rupees, that is 1/3. 4 lakh. For next 4 years, what will be depreciation? 6 lakhs into 4% into 4 years. 6 lakhs into 4% into 4 years. That is 96,000. This will be 3,04,000 rupees. Will be my cash inflow. 3,04,000 rupees at the end of 5th year. If I purchase ABC 0, 1, 2, 5 and at the end of 5th. Now I am going to use for 5 years only. At the end of 0 year, I will be paying 4,50,000. This is my cash outflow. 1 to 5 years, I am going to pay 31,000. And at the end of 5th year, what I'll be getting? 4,50,000 minus depreciation of a first year is 1,50,000, which is 1/3. This will be 3 lakhs rupees minus depreciation for next 4 years will be 4,50,000 into 6% into 4 years. 4,50,000 into 6% into 4 years. 1,08,000. This is 1,92,000 rupees. So at the end of 5th year, I will be getting back 1,92,000 rupees. If I go for renting of ABC at the beginning of a first year is end of the 0 year. Beginning of a first year is end of the 0 year. I will end up paying 1,02,000 rupees. From 1 to 4 years only, because At the end of fourth year is beginning of fifth year. I will not have to pay sixth year rent. From 1 to 4 years, I will be paying rent of 1,02,500. And at the end of fifth year, what I tell? You take your machine back. I am breaking the contract. The rent agreement can be terminated by BT Labs by making a payment of 1 lakh as a penalty. This penalty would be reduced 10,000 each year for the period of rent agreement. How many years I have used? 5 years. 10,000 for each year. That is 50,000. How 50,000? 10,000 will be reduced for each year. I have used for full 5 years and then I am returning it back. So at the end of fifth year, I will have to pay 50,000. How 50,000? 1 lakh is a penalty reduced by 50,000. What is remaining is 50,000. This will be my cash outflow. Be careful when you are taking the factor. XYZ, I can take this factor 1 and 3.605. 1, 3.605. This factor, fifth year, I'll be finding it out last. Here also I can take same 1, 3.605. Here I cannot take same. Here I can take 1, but this factor I'll have to find it out separately. 1 divided by 1.14. I think I have found out in that answer. Renting of ABC 3.037. 3.037. Let me find out factor at the end of fifth year. 1 divided by 1.12. 1, 2, 3, 4, 5. 0.567. 0.567. 0.567. 0.567. Let me find out the present value of cash outflow in all three cases. 6 lakhs is equal to 6 lakhs M plus 20,000 into 3.605 is equal to M plus 3,04,000 into 0.567 is equal to M minus MRC is 4,99,732. Let us find out this. 4,50,000 M plus 31,000 into 3.605 is equal to M plus 1,92,000 multiplied by 0.567 is equal to M minus MRC is 4,52,891. And present value of cash outflow in this case will be 1,02,000 M plus 1,02,500 into 3.037 is equal to M plus 50,000 into 0.567 is equal to M plus MRC is 4,41,642. Where the present value of cash outflow is highest? In purchasing XYZ. Where it is lowest, we are talking about cash outflow and we are not talking about cash inflow. We are talking about cash outflow. Lowest is better and this is lowest, and if I want to use this machinery or my plan is to change the machinery after 5 years, the most profitable, the most financially feasible option is renting of ABC machinery because it is having present value of cash outflow lowest. Again, the question asked is, sir, why here I am not finding out equalized annual? please understand, in previous case, in one of the option we took 15 years, in second option we took 10 years, and in third option we took 10 years. Here, in all three options, we have taken 5 years. If the period of evaluation is same, we need not find out equalized annual NPV. Even if we find out equalized annual, our decision will be same. If all of three options are of 5 years, we are finding out equalized annual, what will be the division, what will be the denominator will be remaining same, and ultimately lowest figure will still remain in renting of ABC. If for the period of 5 years, we are going to rent ABC, and if we need to take an evaluation for 20 years, we will be finding out equalized annual, because the lifetime for all the projects are different, and there the lowest is purchasing XYZ. Excellent question, was not asked in examination. It is RTP question May 2019. If asked in examination, this might be of 10 or 12 marks. Excellent question expected in examination.